Welcome back to the deep dive. Really excited today to dig into the material you shared with us. We're taking a deep dive into the very latest from stocktelescope.com, specifically their today's global market and economic news for June 18th, 2025. It's packed with updates from some heavy hitters. CNBC, Reuters, The Wall Street Journal, BBC, you name it. Our goal, like always, is to unpack all these different threads, pull out the key nuggets, connect the dots for you, and really help you cut through the noise, help you feel informed about what's actually shaping things right now. Okay, let's unpack this.
Yeah, it's a great set of sources you've pulled together. The breadth is really valuable. And what's fascinating, I think, is seeing how these daily market moves, corporate plays, global events, they aren't separate things. They all kind of weave together. They tell a much bigger story about where things are heading.
Exactly. So let's jump right in. Yesterday's market action, it was, well, red across the board. The Dow tumbled 299 points, S&P 500 lost 0.84%, and the Nasdaq fell 0.91%. And looking at some big names, Tesla, TSLA, was down over 3%, Apple, AAPL, down over 1%. So when you see a day like that, this broad decline, what's the immediate read? Is it just, a Tuesday dip or more?
Well, look, a single day isn't a crisis, right? Markets fluctuate. That's normal. But yeah, a broad dip like this definitely makes you pause and ask, okay, what's the driver? Was it one specific sector dragging things down? Or maybe some wider economic jitters creeping in? It suggests, a collective investor reaction to something. We'll probably see how this connects as we go.
Good way to frame it. And speaking of drivers, let's shift to tech. Always a hotbed, especially this AI race. The competition for AI talent is just intense. OpenAI CEO Sam Altman, right? He claimed Meta offered, get this, $100 million bonuses to lure top AI people for their superintelligence unit. Though Altman did add that apparently no key OpenAI folks have actually jumped ship. Still, wow.
Wow is right. That anecdote, it just perfectly highlights the stakes, doesn't it? The AI talent war is incredibly fierce. The value placed on these top researchers is just astronomical. It's one of the hottest recruitment areas, period.
For sure. And then you have Amazon, AMGN. CEO Andy Jassy predicts AI will actually reduce their corporate workforce over the next few years.
Yeah.
Because of efficiency improvements, he says AI is already everywhere in the company.
And that Amazon prediction? That's profound. It really raises big questions about the future of work. We're not just talking automation on factory floors now. This is hitting corporate white-collar roles. It suggests, maybe we should expect workforce reduction to be a much wider trend as AI gets better integrated. It could reshape how companies are even structured.
Yeah, it really feels like a fundamental shift is underway. Sticking with AI for a sec, Elon Musk's XAI, they're looking to raise $5 billion in debt. Morgan Stanley's leading it. And they're offering yields up to 12%. Which is pretty eye-watering, considering they apparently have weak demand and no credit rating.
Right. That's really something. Why such high yields for an unrated company? And the coverage, too, you mentioned 1.5 times. That's lower than typical, even for high-risk, junk bond deals.
Exactly. Below typical.
So what does that tell us? It points to this huge investor appetite for anything AI-related, especially if it's tied to a big name like Musk. People seem willing to take on significant risk, maybe overlooking traditional metrics, for that potential high reward in AI. It's a fascinating dynamic.
It really is. Okay. Shifting slightly within tech, but still significant media consumption. Streaming, for the first time ever, surpassed broadcast and cable TV viewership combined back in May. It hit 44.8% of total viewing time.
Wow, that's a milestone.
Huge milestone. And YouTube, GOGL, actually led all platforms, 12.5% share. Netflix, NFLX, still the top paid service, though.
That's not just a trend. That's a fundamental change in how we consume media. Permanently. The implications for advertising, for content creation, for those traditional media companies, they're massive.
Absolutely. And one last quick tech-related update. TikTok. President Trump's extending the deadline for the U.S. ban by another 90 days. So it delays enforcement of that law, pushing ByteDance to sell.
Another delay. It feels like this keeps happening. It suggests, this ongoing political balancing act, weighing the security concerns against, well, the platform's huge popularity and economic footprint. Less a clear decision, more kicking the can down the road again.
Yeah, seems like it. Okay, let's pivot to some specific companies facing challenges or making moves. Hasbro, HAS, they're cutting 3% of their workforce, about 150 jobs, and they're blaming rising U.S. tariffs on toys made in China. This, even though their Q1 sales were up 17% thanks to games like Magic and D&D. Shares still fell yesterday, though, 3.3%.
That Hasbro example is so clear, isn't it? It shows how geopolitics, tariffs in this case, can directly hit jobs and strategy. even when parts of the business are doing really well. It highlights how vulnerable global supply chains are to these political winds.
Definitely. Then there's JetBlue, JBLU. Their shares slumped 8% yesterday. They warned that breaking even in 2025 is looking unlikely now, citing weak travel demand, falling fares. They're planning cuts, off-peak flights, pausing plane upgrades, trimming costs elsewhere.
Oof, that JetBlue warning. It makes you wonder about the whole travel industry recovery. If a major carrier like JetBlue is seeing softening demand and price pressure, is that post-pandemic travel surge starting to fade? It could have ripple effects across the airline sector, hotels, everything related to travel.
Good point. And one more concerning item, the Air India 787 crash probe. Investigators are suggesting the plane's emergency generator was running, which points towards a possible engine failure or maybe hydraulic failure. It's a Boeing plane, BA. The engine's from GE Aerospace, GE.
Yeah, the detail about the emergency generator.
Yeah.
That's significant even this early. It strongly implies a failure in a primary system.
Yeah.
Which immediately raises critical safety questions for Boeing, for GE Aerospace. It's a potential red flag for the industry, something regulators and airlines will be watching very, very closely.
Absolutely. Huge implications there. Okay, let's zoom out a bit and check the broader economic pulse. Starting with the Fed. They're expected to hold rates steady today. That's pretty much baked in. But the talk is they might tweak their outlook for 2025. Maybe shift from predicting 2 rate cuts down to just 1.
Right. And why would they do that? Probably because inflation is proving a bit stickier than hoped. Plus, some of the recent labor data has been a little soft, maybe giving them pause.
So what's the takeaway if they do signal just 1 cut next year?
It signals a more cautious approach. Maybe they see inflationary pressures lasting longer, or the economy holding up stronger than they thought. Basically implies rates might stay higher for longer than the market was perhaps hoping for a few months ago.
Got it. And we'll get more clues later today, right? We've got the actual Fed rate decision at 2 p.m. Eastern, then the FOMC economic projections, their updated forecasts, and the press conference at 2:30. Lots to watch.
Definitely. Those projections and Powell's comments will be dissected word by word.
Okay, moving to housing. Not great news here. Home builder sentiment. It fell to 32 in June. That's nearing the lows we saw during the pandemic. High mortgage rates, economic uncertainty are the main culprits. And Lennar, LN, specifically reported a 9% drop year over year in their average home prices for Q2.
Yeah, that builder sentiment figure is pretty stark. Near pandemic lows. It really underlines the affordability crisis, doesn't it? High rates are just killing demand. And Lennar seeing prices fall, it raises that big question about the housing market's health long term and what that means for consumer spending if people feel less wealthy because their home value isn't rising or falling.
Right. And what about jobs? Initial jobless claims for last week actually dipped slightly, down 5,000 to 245,000, but the 4-week moving average, which smooths things out, that went up by 4,750 to 245,500. That's the highest for that average since August 2023.
Exactly. So the weekly number went down, which sounds good. But that rising 4-week average, that's the number to watch. It suggests a subtle, maybe, but consistent upward trend in job losses. It's like an early warning signal. The labor market might be cooling off more than 1 week's data shows.
Interesting nuance there. Okay, let's look internationally for a moment. UK inflation eased to 3.4% in May, as expected, and it's but food prices surged 4.4%, fastest jump in over a year. Services inflation did cool a bit, though.
So overall inflation might be heading down, but specific things like food are still really hurting household budgets in the UK. Specific pressures remain.
In Japan, their exports fell 1.7% in May, first drop in 8 months, though it wasn't as bad as feared. But here's the kicker. U.S. auto tariffs were blamed for an 11.1% year-over-year decline in shipments to the U.S. Companies like Toyota, TM, and Honda, HMC, are expected to feel that hit particularly hard.
And there it is again, the direct impact of trade policy. Those U.S. auto tariffs directly hitting Japanese exports, hitting major global companies. It just constantly reminds us how interconnected everything is and how trade disputes ripple through the global economy.
Absolutely. Okay, final stretch here. Let's cover healthcare, regulation, and some global affairs. Healthcare first. AbbVie, ABBV. Their migraine drug, Qulipta, did well in a late-stage trial, outperforming a generic. Good news for their portfolio.
Yeah, that's a positive on the innovation front. A win for AbbVie, but potentially also for people suffering from migraines. Shows R&D paying off.
Right. But on the other side of healthcare, there's political pressure. Democrats are apparently leaning on Big Pharma, Pfizer, PFE, J&J, Merck, MRK, AbbVie, ABBV, Amgen, AMGN, over what they call minimal tax payments in 2024 and their lobbying efforts. This is happening while the Senate is debating a tax bill, one that could actually extend offshore tax breaks.
Hmm. That's that classic tension, isn't it? Between wanting to incentivize innovation, which costs a lot, and ensuring corporations pay, what's seen as their fair share in taxes. It's a huge debate, especially with active tax legislation on the table. Raises fundamental questions about corporate responsibility and tax policy.
Definitely a space to watch. Okay, broader policy. Elon Musk again. His company X is suing New York State over a law that makes social media companies disclose their hate speech policies. X argues it violates the First Amendment.
Oh, that's a big one. A direct First Amendment challenge to content moderation-related law. This could have really wide-ranging implications for how much states or the federal government can regulate platforms on content issues. It's a major legal test case.
Seems like it. Switching gears to crypto, some positive news for the industry, perhaps. The Senate passed a bill that seems crypto-friendly, creates a regulatory framework for stablecoins, seen as boosting legitimacy. Now it goes to the House.
That is significant. A Senate-passed bill specifically for crypto regs, especially stablecoins, that's a major step towards bringing crypto more into the traditional financial system. Could pave the way for wider adoption, clearer rules, something the industry has wanted for a long time.
Interesting. Okay, internationally, Iran's supreme leader issued a warning. Said severe consequences if the U.S. intervenes militarily in the conflict with Israel. Claimed Iran won't surrender.
Yeah, that's strong rhetoric. It highlights just how high the tensions are in the Middle East right now. It's part of that complex, dangerous diplomatic dance happening in the region. Needs careful watching.
For sure. And a landmark move in the UK. Lawmakers voted to decriminalize abortions in England and Wales. Stops prosecutions under a very old 19th century law.
That is a huge legislative change. Decriminalization after centuries. It marks a profound shift in the legal and social landscape regarding reproductive rights in the UK, moving it firmly into healthcare, away from criminal law.
Wow. Okay, before we wrap this deep dive, just a quick market watch, other things on the radar for today. We've got more economic data coming. MBA mortgage rates, building permits, housing starts, all key for housing. Initial jobless claims again, which we talked about. EIA data on crude oil and gasoline stocks, important for energy. And net long-term tick flows showing capital movement.
Right. All those pieces will add more color to the picture, especially alongside the Fed news later.
We also had some earnings. Korn Ferry, KFY, they beat expectations on both revenue and earnings per share for Q1. Revenue up almost 3% year over year. And a couple of IPOs confirmed for today. Caris Life Sciences, that's CAI, an AI biotech. And Slide Insurance Holdings, SLDE, a specialty insurer.
So more pieces to the puzzle. It raises that important question, right? How will today's housing data, the energy numbers, these earnings, how will they all interact with what the Fed says later? They aren't in isolations. They all feed into that broader economic narrative. Worth keeping an eye on all of them.
Great point. And a good place to start wrapping up. We've covered a lot today thanks to those insights from stocktelescope.com, from market jitters and the AI frenzy to how companies are adapting, those key economic signals, global policy shifts. Hopefully this deep dive gave you that shortcut to feeling informed, connecting the dots between all those facts and figures you found. And maybe it leaves you with this thought looking at AI, trade, policy, all interacting. How much of our economic future will be driven by tech disruption versus government action? Where do you see that balance tipping?
That's a great question to ponder, because this constant flow of information like we've explored today, it's not just about knowing what happened. It's about understanding the forces behind it all and questioning, what might come next, constantly learning, critically thinking.
Well said. And if you found this deep dive valuable, please make sure you subscribe to the Market Pulse podcast. We do this regularly, helping you stay ahead of the curve. Until next time, stay curious.